Good morning, everybody. Welcome to the Flow Show. Me and Kay are back from our travels up to the Big Smoke. Day off yesterday. Good to see you lot haven't broken anything while we were away. Morning, Kay. You recovered?
Morning, Ryan. Yeah, sure, mate. Was a nice trip. My niece is a little bit different this morning. It didn't like all that standing and things, but no, been a good trip up into the city. Saw a few people, met a few new faces. All good.
Yeah, very good. Very nice to get out and about in the old city, our old stomping ground. So always good to meet a few people as well. Right, let's get stuck into things. No rest for the wicked here. We had time off, so now we're back to the grind. Bit to go over. Going to start with the economic data. Just coming through bits and pieces that obviously we missed yesterday. Germany CPI coming down a big chunk. That was seen in the regional numbers earlier yesterday morning. Looks to be some of that travel washout that we saw inflation going up on. The subsidies from last year were feeding in, just skewing the numbers there. That looks to be dropping out now. What that has done, it seems, will just jump forward to today's CPI numbers, particularly from the Eurozone, the flash numbers there. And as you can see, quite significant drops in inflation core and headline inflation there, likely to be the German effect on that. Core CPI expected at 4.8 came in lower, 4.5. Headline 4.3 from 4.5 expected, so both lower than expected. Again, on that German number, likely the big driver. As we saw from the other numbers, Italy at the same time, a little bit more stickier. The Eurozone HICP measure 5.7 going up higher than expected, and last month CPI was down a pip, but still sticky numbers, and we've seen that from other countries as well. Going to hop back to yesterday's stuff now, just while we're on the subject. US GDP, nothing much to write home about there. The final numbers, we're just about to finish Q3, so no one's really fussed about that. Unchanged though, the quarter-on-quarter annualized number there. Jobless claims look to be trending lower still, 204k on that one. 4-week average also coming down. So just when we thought, are we going to see some job worries? Well, jobless claims has been trending lower for several weeks now, so still no real worries coming in over there. Don't worry about these PCE prices. It's all Q2 stuff. We get the updated PCE numbers today. Pending home sales looking a little bit soggy, down 7.1%. So playing into a little bit of housing weakness that we're seeing just coming in of late. CPI day in Japan as well, with those Tokyo numbers as well, the usually coming up ahead of the national numbers. Core 2.5%, a pip worse than expected, down 3 pips on last month. Headline CPI for Tokyo just down a pip, still sticky, but it is moving off a touch. These reports have generally been, 1 month up, 1 month down, that sort of thing, unchanged. So, as mentioned, stickiness is still the headline there with that. Unemployment rate staying unchanged. Industrial production coming in flat, which could be considered a win, considering it was expected to fall 0.8%. Coming through some other data. See lots of data. See what happens when we take a day off, Kate? It all comes trundling out. Retail sales year on year up 7%. That one, I think the month-on-month number was 0.1%. I've missed it in all that blast there, but coming in 0.1%. Missing estimates at 0.4% on the month there, but still looking like fairly decent numbers there. UK final GDP numbers out as well, quarter-on-quarter. Nothing, no change, 0.2. Year on year was up a couple of pips, so slight improvement there. Better numbers for investment on the quarter and year on year. Might be a little bit of a skew in there, I don't know, but those numbers looking fairly positive on that side. But Growth overall, not too hot, not too cold, bumping along around that zero line. So we're not expecting any fireworks nor any big blow-ups as of yet. Germany looking a bit sucky though still. Retail sales down 1.2, were expected to rise 0.5% year on year, also coming in more sucky as well. Some price data there from those guys as well. Import prices 0.4 in a month, down more than last month, minus 16.4, matching expectations there. So again, just a little bit of price pressure easing perhaps over there. France CPI was expected to rise to 5.1, came in matching last month, 4.9. The Eurozone measure, again looking to go higher, but came in at 5.6. So at the moment, these forecasts aren't getting really close to the mark, but overall, that word stickiness is still prevailing in these numbers. German jobs. Unemployment was expected to rise to 15k or go up 15k, only went up 10k. Unemployment rate unchanged. Really, probably nothing to see there. Mortgage approvals in the UK, 45.35k, so slightly better than expected. Mortgage lending up a good chunk there. Likely, maybe we're seeing the start of some of this remortgaging coming in, people locking in, hence why that big move up over last month's mortgage lending. Bank of England consumer credit, 1.644 billion, beating expectations, 400 million higher than expected. As always, we look at the credit card component of that to see if there's any red flags. Nothing really there. It went from 0.6 billion to 0.7 billion. The main pickup in borrowing is still on personal loans and things like car finance, which, as we've been saying for a while now, the UK is in the grip of lots of people changing their cars to become compliant with new climate zones. For those not from the UK, ULEZ, as it's known over here. Everyone's still chopping and changing their cars up for that. So that's potentially why we're still seeing fairly strong numbers there. But on the old plastic, nothing to worry about thus far. Well, I think that's it from the data, so we can move on to the other headlines. Get rid of that for the moment. Bundesbank's Nagel, ECB's Nagel, says more rate hikes will come if the data shows further steps are necessary. We do not yet know where the peak is, or he doesn't know where the peak is. Others think they're at the peak. ECB's Kazak's, one of the hawkish lot who are now in pause mode, says most likely rates will stay on hold for a while. Now, the ECB, and this is topical, Kay, because we had a bit of a conversation at the Bloomberg event yesterday. The ECB is apparently going to look to AI to better understand inflation after some big misses. They want to analyse millions of data points, including public price data, corp statistics, news articles, and bank supervisory documents to hopefully produce a better analysis for policy decisions, or given their decision making thus far, particularly when they all telling us inflation wasn't a problem. Maybe they should have got AI in a bit sooner. What do you make of that, Kay?
Well, I mean, two things. The first thing is that Bank of England hired Bernanke before the ECB could put a hand on him to analyze all the mistakes. So ECB has to use AI. Did they say what they were going to use? ChatGPT or OpenAI? What is it? Yeah, I mean, yesterday's event up in the city spoke a lot about AI, and it does look still to be the way forward. Although we heard trading-wise and analysis-wise for the markets, really, there's still quite a bit of mistakes creeping in there of what we heard, mixing FX trades with futures contracts and stuff. But well, it shows they made mistakes. But is it really going to help them to use AI? I don't know, mate. It's an open question. It's likely going to be the way forward, whether it's right or wrong, actually. So, but if you can blame it on AI, at least you won't be the person won't be blamed for it. Only the one plugging in the AI into the system, I guess. So a bit of umbrella opening, and don't look at me, look at something else if it's wrong. It's a bit funny because, as you say, we have been talking for months and months, and you really well highlighted that the central banks were completely wrong in their transitory approach to inflation. So it is possible for humans to recognize it. Now, begs the question: how many real humans are at central banks? Then I guess. Yeah, well, I'll leave it there, mate. I don't know whether it's going to help them or not. To prevent from mistakes in the future, AI will also only look at the past, right? You can only crunch the data and make a conclusion out of it.
Yeah, and it was interesting. But just for those that don't know, we attended a Bloomberg for FX, the Future of FX forum up in London, and there were several large banks and houses, trading houses, talking about AI, and the gist was, it's going to be coming in. It already is in, but there's still a long way to go. You just can't substitute that human element in AI. That's the one of the things I picked up from that. And also, AI is going to come in to improve execution. Algos and the like. They can execute things, I'm afraid to say, better than humans at times. But it's that, what did one of the gentlemen call it? It's the trader's ear. You can never replace the trader's ear, being able to hear things about you, pick up on quick clues, quick sentiment, and make those reactions in trading. So while AI is going to be a big thing, they're not there yet. They cited a couple of use cases where even when you sandbox it and plug in all the information, it popped up answers to questions that you quite weren't expecting to be the answers. So there is a long way to go in AI, but it's all coming slowly for us here. As for the ECB and what model they use, they're probably better off just asking Alexa what to do with monetary policy. She probably has a better clue at the moment than half those guys over there. But we'll see what happens and see how AI affects ECB press conferences to come in. It might be better having a robot than Lagarde there anyway. We shall see. Moving on, Fed Goolsbee said that holding to an inevitability that jobs losses are needed to slow inflation risks a near-term policy error. Some analysis shows that inflation will reach target soon without further policy tightening and only a modest slowdown in growth. If the Fed sees a lack of progress on the price side, it will have to raise its restraint. And he's still trying to process why long-end interest rates are increasing. And that effect also can have an additional tightening effect if the market takes rates higher in yields and things like that. That has an effect of being a tightening mechanism as well, which is something that the Fed and other central banks may keep an eye on. They don't want markets tightening too much. Fed's Barkin says a government shutdown would create uncertainty. No shit, Sherlock. The lack of data due to a shutdown would complicate the understanding of the economy. Credit card spending data is a good alternative. You must have been listening to us on the show again. Cautious, we should be cautious reading too much into Fed forecasts. So on the shutdown stuff, it's getting a bit close. We're getting really to deadline time. US House Speaker McCarthy says we can work through the weekend to figure government funding out. Nice of them to give up their weekends to stop the country shutting down. Senate Majority Leader Schumer says the Senate may vote on a stopgap Saturday or sooner. There was talk during the day that progress was being made, but as usual, the usual bum fights are happening, so it's still a little bit in the mix what's going on. Over in, between the US and China. Apparently, the Wall Street Journal reporting that talks are gathering momentum, paving the way for a possible Xi-Biden summit. We'll see what that brings out. So this shutdown stuff, Kate, we're inching closer. It looks like we may be going into the weekend, which maybe gives us a bit of weekend gap risk for the open.
For sure. For sure, it's now it's a gap risk, and I guess if you look at how the markets are now, taking away whatever can happen on the end of the month, it does seem that we have found a bit of resistance there in the dollar. Actually, a pretty serious resistance, because even with lower European CPI numbers, the euro dollar is still inching higher back into this first resistance here. So yeah, and it all creates a bit of risk, and you know what, if they keep it open for 4 or 5 weeks, pushing it into October, you can have a little bit of a knee-jerk reaction. But it really does feel that what the dollar is concerned, we have gone far enough on Wednesday. I'm actually relatively disappointed I wasn't on the desk yesterday, because a lot of stuff is reversing, which was my thought for after the end of month trading today, but it does seem the market is already anticipating it. Yeah, I mean, we can't rule out the event risk over the weekend, but I thought there were enough talk saying that they would find some sort of solution, wasn't there? Or did I misread or miss some of the comments that were made? It's possible.
Yeah,
I don't really...
it's been back and forth. You know, there's even talk of some in the Republican Party wanting to out McCarthy, getting replaced. So there's there's bum fights within bum fights within bum fights going on over there.
Yeah, and then
it's weird, because I don't think the market sees this possible shutdown as big as the prior one. And was that the one we had earlier in the year? That was the big bum fight, the big shutdown. This is almost like they're not bothered if they let it go shut down, because it would be a short-term thing. They're going to get a deal done. It's just one of those things where maybe both sides are trying to say to the other side, we're not giving in. If we shut down, we shut down. But as I say, I don't think it's ever going to be a long drawn-out thing. We may get no agreement on Saturday. The market wakes up and says, right, it's a shutdown from Monday or whenever, and then Monday they come in and get a deal done. I think that's the possible situation. So I'm not sure the market reaction is going to be huge on it.
The thing is, shutdowns is I'm not going to say it's easy to trade or whatever for us, but it's just like the longer it drags on, the worse it gets, right? And that's the thing. The problem with this one, where I'm going to slightly disagree with you that it's not such a big thing right now, it actually may become a much bigger thing, because the ones that we had in what is it, March or so, or April, that was pushing it further down the road, but now we are further down the road. So what are they going to do about it right now? That's that is, I think it could actually end up being a bigger thing than the one we had earlier in the year. But yeah, I mean, it's very tough to front run events with politicians. So we really will have to see what happens once we get there, really. Yeah.
But yeah, either way, there's a bit of a risk for the weekend, one way or another, whether it's shutdown news or not. Now, yeah, as mentioned, we look at dollar yen as the proxy. That looked to be the dollar looked to be the bulk of the flows, month end or whatever, coming into this week. Whether we've seen that peak yesterday and now it's hit a brick wall, bit of a sharp set off this morning, which might have been, I don't know, Mr. 8 a.m. man and all the models just reacting, or a lack of buying this morning has seen everyone turn tail. It has been a bit of a strong move elsewhere, particularly when you look at something like euro dollar. We pointed out the 105 level. You couldn't get a more perfect move on that one. So yeah, it looks like the dollar buying has abated. What that's done, particularly for dollar yen, is it's reduced, in my opinion, the intervention risk. We've still got to get through today. Obviously, we've got some data later, the F.A.C.E numbers, of course. But I was looking at this also. I was looking if we did get a, maybe that move up to 150 through 150 today, that would have heightened possible intervention for this weekend. Not saying it definitely would have happened, but just, experience and watching the price moves and price action. If we'd have been above 150, maybe 151, somewhere like that, I think there would have been a growing risk of intervention. And I wouldn't have liked to have been long dollar yen into the weekend. But as it is now, if this move continues, I mean, we're not far off the highs still, but if we're looking more softer, if we stay below 150, I think into the close, I think that's going to reduce a lot of tension for the Bank of Japan. We're still not getting the hugely volatile moves. We'll have to watch that fix later on, but I think maybe a little bit of pressure's off. And I know a couple of guys know when we're looking at options, I was looking at some puts down below around 148.50, 49-ish, depending on where we were. Definitely looking at those sorts of levels if we were up above 150, but I might just sit on my hands now. I'm still long from 147, so I'll be happy to sit in those. I'll be happy to keep those over the weekend. Let's say we're at 149 or below going into the weekend. If we were above, I'll be worried about those longs and keeping that risk with that intervention risk. How do you see it right now, Kay?
Well, we're looking at how it develops right now since the morning. I'm a little bit worried, actually, because you see all the dollars are under pressure, but the dollar yen is coming back, and the crosses are actually ramping higher. This is actually exactly barring sterling, perhaps, which is not really, which has seen a big rebound, and which should be we should be a bit of seeing sterling selling for the end of month, but I think the dollar does its bit there. But no, I'm actually a bit worried on the yen crosses that we may run right into one. And I'm not saying it's going to happen. Really, by no means, I'm not saying it's going to happen. But my alert antenna is really quite high, because if you look at look at all those crosses, Canada,
good point.
Kiwi yen,
yeah,
even the sterling yen, which was doing a little bit worse for a while, is really crawling back higher pretty fast. Euro yen was at a risk of breaking yesterday and the day before. It's ramping higher. I think if you take away the dollar yen, which is under 150, I think the rest is looking absolutely ominous. Or
would that swing it though? Would the crosses swing it for them to hit the button if dollar yen is around 149 or below that 150?
Yeah, that's the thing we've been talking about, right? Are they only looking at the dollar yen? And the answer is no, because if even if the yen trade weighted index now is at its really lows, I think it has an importance, because we came out of 3-4 relatively quiet sessions. I mean, okay, dollar yen was 100 points higher or whatever, but then the rest of the dollars were higher as well. Yen crosses weren't moving that much, and yet Suzuki found it useful to come and warn us every day. So there's still those two things going on. I think there's the government with their stimulus, and the Bank of Japan funding it, and that's why they are so slow in normalizing. One of the reasons why they are so slow in normalizing policy. But on the other hand, you have the MOF, who is likely who will have to take care of the value of the yen. And let's face it, Bank of Japan publishes the NIR on their webpage, so it's going to be taken into account, and we are back to very, very, very low levels. So I do think that where we were just looking at speed and the dollar, we really have to look at other stuff as well. That is my opinion, and I think something's changed versus the traditional and historical approach to interventions. I do think that something has changed. And if you see even a dollar yen here, but assuming that euro dollar goes back up to 107, 107 and a half, cable trades above 123 again, the resistance, and dollar yen still sticks here. It might be enough to bring him out of the woods. It just may be, you know. I'm not ruling it out. I've got my calls running. I've been really actively hedging them on this move closer to 150. Bought some back of the hedges on the drop this morning. I'm just running that, but I do make sure that I'm now quite highly hedged just for the next couple of sessions against that call. I'm not leaving too much of it open, and I will go into the weekend just as a measure of caution. I mean, the call is doing good actually, but it's and the hedges as well. But I think it's good enough now to be on pretty high alert.
Yeah. Okay. You might have scared me into getting out my longs now.
No, well, you know, no. If you have a cash position, it's going to be about the levels, right? But you just make sure that if you want to protect your cash position, let's assume that since we held 148.5, you just put your stop under 148.5, but just make sure that your bookie can execute you, and that you're not executed at 147.5 or so, you know, if they intervene, because it can create gaps. If for anyone who has a position now long dollar yen and want to protect it, make sure that your broker protects you as well, and that you're not finding yourself looking at a deep gap versus your stop loss level.
That's the big risk for this weekend, because if they intervene before retail platforms are open, you've got no chance. You'll get in wherever the first price is when it opens. If that's 400 pips lower, you know, if I've got my current stop loss on my 147 longs is at 148.40, so I came close. But that won't mean anything. Having my stop there won't mean anything. If it opens 400 pips lower, that's where I'm going to get my stop filled. So that's the risk I don't want to potentially wear into the weekend. You know, if it's trading at 151, fine, and I've got a bit of margin to play with, because an intervention's probably, you know, 200, 300, 400 pips maybe max. So at 151, I'll probably be opening at 147. So I've got time to maneuver potentially. But if we're here and they intervene and it opens 400 pips lower, no, I'm out the, you know, I'm taking a hit on that. So yeah, you've got to look at your risk. Maybe nothing happens this weekend and it all dies down. Who knows? But you've got to protect your accounts at any one particular time. Right, let's move on to some other prices. So Ali, you're doing your gold jobbing again. Good to see, mate. I took a bath on my gold. I tried the knife catching trick. I went against this fib as a first entry. I did in there, and then I got stopped out at 65 down here. So I took a bit of a bath on that one. That's what happens when levels don't hold and they break quite significantly. Bit of a move up again. This is all a bit mixed in with what's going on with the flows and end of month and whatnot, so a bit noisy in there. But if we're going to get up to this broken level 1884.85 and that holds, that's going to suggest some further downside for the gold stuff. As you can see on the wider chart, we have got a fib further down 1841s, and then we start getting into a bit of a traffic zone down in towards the low 1800s. As we pointed out though, when levels hold, they can hold pretty well. Euro dollar, it was all about that 105. Been highlighting it for quite a while now as a real long-term level. A lot of price action, historical price action there, and so far I've had a decent bounce. So I'm getting back my gold stop money on this one pretty well at the moment. Just be aware, those who are not in the room haven't seen, I did put a tweet out. We have got a reasonably large expiry up at 106 today, 3.75 billion rolling off. So I wouldn't be surprised if, for want of any other data and headlines, we might just hang around there for a bit. There is another bundle up at 107s. 3.8 billion. So even if we tick up there, we might see a similar thing happen. So just keep that in the radar for today. Really is a case of the dollar reversing it. I mean, can you call it dollar weakness, really? You know, it's not fundamental weakness at the moment. It's just washing out of what we've seen all week, isn't it, Kay?
Cracks.
Cracks or cracks?
Cracks with CK. Cracks appearing. Seen those housing data coming off a little bit. Seen the prices in the GDP coming off a little bit. Of course, these housing data are still pretty good. I also think that there is just a case of went a little too far too quickly. So the jury is out right now, but I do have the impression that there may be a few cracks appearing in this dollar armor. Recall what I said when on Wednesday we had a dollar buy over the fixing, and then it even continued a little bit later. But I was in the cable and happily took my profit, and because anywhere below 120, 140, I just felt that there were like bits creeping in, and I said it several times in the chat room. I said this stuff is starting to look stretched, and people seem to be quite happy to get given what the fixing people have to sell in, and that was in the cable, and then the euro tagged at 104.8590, and it was all seemingly prone for a bit of a, and now it depends, yeah, a reversal or a setback. But the setback is real and pretty strong, and euro is in the first resistance, the breakdown zone here, and it's right now it doesn't show too much of a move to get back down, despite lower CPI prints out of the eurozone. Cable is still going higher, and we're inching closer to the 123 break zone. And then you have a couple of them which are really, in my opinion, impressive when you see the rebound. And those are the commodity currencies. Look at Kiwi. Kiwi was one I said in the room as well. I was going to keep an eye on for the end of the month, because I would have loved to buy a further sell-off, and I seemingly completely missed that one as well. We are 140 points higher in the Kiwi of the low, which is more than 2% move. We can't. We know that there's not that much liquidity in New Zealand dollar, but you just can't ignore it. It's an over 2% move, which is one. It's not one of the major currencies, but it's one just in the back of it. We that bounce of 59 is serious. If you look at the Aussie dollar, let me pull that one up as well. We went to tickle those lows, even went a little bit below the prior lows, but then we already have like 150 points rebounds. You know, that is not something just a little setback. That
Yeah. Looks
to me the market may have been over positioned and into month end, and then a bit of cracks appearing in the US data as well. Are setting it back, but it's going to be an interesting one come tonight and the open on Monday. If the dollar doesn't stand up come next week, I think we may have seen for this move the high in the peak in the dollar. I think so, and that was somewhere my idea. I started the week with saying that the last rush in the dollar, but it seems to have come 2 days earlier than what I expected anyway, and we're already on the way to the other side. So we can't give any trading advice, but I think it wasn't a bad thing for those who were trying to catch a knife in stuff like euro, dollar, cable, Aussie and Kiwi, for instance.
Yeah.
The yen is a different animal, as I said. It's really a different animal. It is one of those currencies that's the models, and I agree, say that we should have a bit more yen selling before the week is over. And that's where I'm going to say be very, very careful what happens over the weekend. because they may really not like it, or even this afternoon on a Friday afternoon, just give those speculators something to think about. It's all possible, you know. So I'm not going to rule anything out there. There's one last thing, and perhaps I can mention it while looking at the chart, because we had Mexico yesterday as well. We had the Central Bank of Mexico, and I would like to have a look at the MEX once you will be done.
Yeah, we'll do, mate. I'll hand it over to you in a moment. Yeah, I mean, you know, Kiwi's looking a bit standout, but then we've heard people getting a bit more bullish over the Kiwi and potential for the RBNZ. So you know, maybe that explains why we're seeing a bit more action in there than we're seeing in Aussie dollar, perhaps. But then you've always got to check your charts, because you know, what do we say about this area here and the price action here? It had stopped going down. It found its bottom. You know, it slowed up this descent, and then we just start to see the little creeping up of the support steps. So you know, that's I've explained it enough times. That's the sort of price action you want to see. Okay, we kept making lows, fine. Then you get the point where we stop making new lows, and then the lows become higher. That's the price action you want to see. It is a little bit of noise in here with this end of month stuff, but now you've got to look at what it's got to do. Okay, fine, it's had a nice bounce. What's it got to do after that? You know, you might be a bit reluctant to buy it on up here at the top, given the move we've seen. So now you need to look below, see where your break points are. You know, 59, 80s, 90s is a break point. You know, if we get down there, hold it, then that gives you conviction that this is maybe has something more to it than just a reactionary bounce. Then you've got your conviction to maybe try the long side and look for a move up. But if it continues going up, it's got to get above somewhere like 60-60. You know, just this area where we had prior support before we got the break. And same with things like Aussie dollar. You know, where have we run into? 65. Can't get above 65 in this move. Is that significant? We'll wait and see. If it gets above 65, can it clear this area? It couldn't clear this area for the best part of a month. So it's still got plenty of work to do. Slightly different price action to the Kiwi, though. This is coming off a fresher low. So you can see maybe we're not quite ready to turn. We haven't had the evidence of stepping up off the bottom yet. So it keeps the picture a bit muddy. Strong move, no doubt about that. Still got plenty of work to do on that one. And the last one, dollar China. Again, I'm ruining the potential of missing something when not on the desk or not catching it at the right time. 732s, we got up there again, a bit higher than 732. This was my watch point. If we were going to maybe move to the highs, we needed to get above there and hold above there. But we got up there, we went a bit higher, then we've fallen out of bed again, back down to that old 728 area. That was sticky previously, just a bit of an on-off level. So again, possibly further washout of the dollar move rather than anything's looking rosier in China. So all about the dollar pretty much at the moment, and we'll see what happens into the last fix of the month when we get that later. Right, Kate, get your magic wand ready, mate. I'm going to bounce it over to you. Oh, I don't know, when am I doing it? Oh, lost it. Have you got it, mate?
Shall I just grab it because you haven't? Stopped.
Yeah, my bloody system's updated.
Okay.
My Chrome system updated. And I usually have a stop sharing button.
Okay. I can't find it. You guys see my screen?
Yeah, got it, mate.
Okay. So first of all, and look, this thing that was Wednesday. We went lower here, and that's the differentials, right? The short-term differentials. Then we had this at the start of the day yesterday morning, and the differential started to tighten. Look at where the euro dollar is. This is again something that we need to look at, and it really gives you good directions. We are now stabilizing, and the euro dollar is roughly stabilizing, although still being a bit beat, but we stabilize at higher levels. Keep an eye on where we close the week. If we start to close above, tighter than 175 BPs on the short term, yield differentials, there is a chance that the euro dollar follows suit. I'm surprised, yes and no, but I'm just wondering and having a little bit of questions about the euro as such, because seeing the inflation data come up, albeit being a bit sticky elsewhere, it is a factor that the market is looking at. I'm not sure that crosswise, for instance, it's a good idea to be long euros in too many crosses, but the euro dollar is what it is. There's a lot of dollars in there, okay. And before just having moving on to anything else, so we had Banxico last night, and we had just before earlier in the day, around the time that the US data hit the wires, we had the Mexican employment rate as well, which actually went lower again. It went down from 2.9 to 2.7%. The non-seasonally adjusted also down a little bit from 3.10 to 3%. That already put a cap on the dollar mix, and later on, the Banxico keeping the rates unchanged was enough to give the mix another push in the back. You know, I've been looking at those levels here. It just failed to reach there, unfortunately. I've been saying it a couple of times today, but it would seem to have been really a bad day to be out of the office for me yesterday, but not catching some reversals on some or at least pullbacks on some currencies. Unless we get the dollar wrecking ball back into play with the PCE data this afternoon, I think we may have seen the top there again for a little while. And I'll be looking at perhaps selling a few rallies there, but another one, because I'm looking at there's a little bit more in there in the differentials as well. Not for long-term carry necessarily, but still, you're getting paid every day to be long mex against virtually any other currency. So any pullback closer to this up into the 1860s, I'm going to have a close look at what's happening with the Euromex as well. I might be getting tempted there just because Banxico didn't give the bears on the mex too much food. I also think that the rally that we saw was partially driven by the dollar, but likely also driven by the fact that Banxico is reducing that FX forward hedging program, so they haven't been rolling that much, creating demand for the MEX. So there was less demand for the MEX. So that was also part of this move. But I think if we get any moves closer to those levels here, I'm going to get very tempted, perhaps this afternoon also, to give it a try again. Bigger levels in the upper 18s. So if I try anything, I will for sure not go full position as I usually do, and try to leg into stuff, especially if it's like half carry, half spec position. But I reckon the party may be over, and we also see, like, we had a try over 19. Then we stopped shy of 19. Now we're stopping shy of the prior highs as well. So that is also encouraging me to say, or to at least think that we still may not be done with the strength of the mix. And yesterday as well, being in the at the Bloomberg event, unfortunately, my question didn't go through, but there was a comment about the nearshoring, and which is definitely a factor when you de-risk from China, and when you add Mexico to your production countries of productions, especially for the US, it is creating demand somewhere for the mix as well, or making the Mexican economy look pretty good compared to others. And I do think that if you talk only about this nearshoring, that probably the US US-Mexican relationship is tighter than the EU relationship, with any other nearshoring country, also outside of the EU. So the MEX may still have an advantage there over stuff like the euro. That is just my thought that I wanted to give here. Yeah, as Ryan already showed, that euro dollar, and I'm on the daily here, so a little bit wider. That euro dollar saw a big setback. We stopped on those prior lows, prior highs. It's all of a sudden looking cheap below 105, right? We are back on those levels that I showed earlier, the 106, 10, 15, which did see the euro dollar accelerate on the way down once we broke below. But we are now back on the resistance, and it's going to be a very interesting watch, I think, to judge where we end the day. If we can close above 106, 10, 15, and especially as well this 106.35 tonight, there may be more in the move. And the dollar, as I said, I'm not saying it's the end of the party in the dollar, but we are starting to look like this could be really the start of a reversal. Because if you look at the cable is getting closer to his 123, 1020 break zone. We did give it a try under the next horizontal support, and then that's where I was saying in the room on Wednesday, I said it's starting to look a bit look a bit pushy. We're trying, and I was saying that I would be more than happy to get some under 121, but we didn't get there. So that's another factor to keep in mind, that we did not get until the level where it's really hot. That means that the support and the buyers came in early. So we can't ignore that. I'm really starting to think that there may be more into the dollar correction. So if we see something into the end of month flows this afternoon, it may give us a bit of an opportunity if we see setbacks in some of those pairs. Yeah, the yen you've already shown. I'm quite worried about it. That the risk is going to be very high. I'm at least on alert. It may not happen. I saw that Mr. Yen Sakakibara came out yesterday saying that he thinks 155 is their level. I'm not so sure whether it's just the dollar that they are watching. That's what we talked about already. So anywhere, if we get a push into 150 or so later today, I doubt we're even going to get there. But if so, I'm going to go fully hedged against my call in the dollar yen and see what happens over the weekend. And a quick one on the metals. We have seen, and again, I think I've been a little bit too conservative there. We have seen this move into the 22.5, 22.25 zone support on silver, and we are already back above 23. It's holding, right, and I'm long-term long, but I just hope to get a chance to add some here again. And I know people in the room who were present yesterday. Some of them already picked some up here. Very good trade, guys. This is why this our room and our community is so important. There's a lot of great ideas coming out of there. We talk about a lot of stuff. Talk about FX, we talk about metals, we talk about, there's a room for specifically for equities as well. It's really, there's a lot of really great ideas in there. So join us, I would say. You already covered the gold. I just want to reiterate this Kiwi is looking like, I think I may have missed that one. This is really a very, very, very good level in my opinion around here, and you give it a bit of room just to below the prior low, you know, and it's a relatively low risk trade for somebody who wants to counter trade dollars. But again, I hope there will be an opportunity to do it. And with that, Ryan, I'm going to give it back over to you for the end of this week. Just telling you to stay safe when you trade the fixings in about 4.5 or so hours from now, we should see a bit of activity, and then end the month and see what happens into the start of the next month.
Yeah, can you see my screen now? Okay.
Jawohl.
Yeah, good. Cool. Yeah, so just looking at the PCE data, that's going to be the kicker today. Looking to follow the same path as the CPI data we got a couple of weeks ago, in that the headline is expected to come up a couple of pips to 3.5, but the core number is expected to drop back to 3.9 from 4.2%. So, yeah, as I say, similar pattern to the CPI. Really, the trade will be if there's a big variation, if this is hotter than expected, if this isn't as weak as expected, or conversely, if they're all weaker than expected. In fact, this doesn't go up. That might, again, jiggle around the Fed expectations and confirm whether they were right to pause and potentially go on hold. So that's really to look at. Just keep an eye. We also get some of the wages data and income spending, that sort of thing, coming out as well. Keep an eye on that. Canada GDP as well. It's the monthly number, way back in July, so a bit lagging. But might be something for the loony lot to keep their eyes open. Austin, RBA is the 3rd, which is Tuesday, I think, off the top of my head. Is the RBA, yeah, 3rd of October, the RBA.
Tuesday morning, yeah?
Oh. Yeah, Tuesday morning, so Monday-ish night, depending on where you are, of course. Right, all left to be said. Thank you very much for coming to the Flow Show and supporting us and what we do here by your viewership. I hope, again, this week we've steered you with some good analysis and kept you on the righteous path. Thank you as ever to my colleague K-Man for all his valued insight, and Steve and everyone else in the ForexAnalytix squad for making it all happen. Have a great rest of your day. Don't do anything silly. You've had a good week already. Don't go blow it at the last minute. Switch it off. Go and do something better instead. Go down a pub. Have a great weekend, everybody. We'll see you all bright and breezy on Monday.
Hello.